Well, the latest news and the most important news of the hour, the crude prices. OPEC Plus has decided to delay its planned December oil output increase by 1 month, citing weak demand, particularly from China, and rising supply outside the group. Now, the alliance initially proposed had postponed this to 180,000 barrels per day increase from October, and now it has been delayed to December. Now, Pulkit Agarwal is the head of India content across commodities. S&P Global Commodity Insights is joining us. Hi, Pulkit. Thank you so much for joining us. Well, Pulkit, the oil prices have risen more than 2% on a decision by OPEC Plus to delay by a month its plans to increase the output, with an increase already delayed from the month of October, because of falling prices and a weak demand. Now, is OPEC Plus really waiting and watching out for more clarity on the economic impact of interest rate cuts by the US, the fiscal and the monetary policy easing in China, the US presidential elections?
Yep. Yeah, indeed. OPEC Plus, as against, as expected by a wider part of the market, OPEC Plus has indeed decided to, postpone its, sort of resumption of bringing back of production cuts that it had had, and now they are expecting to do it, from January instead of December, and this is again a second. Postponement. Earlier, they were expected to bring it even a month earlier as well, and markets remain quite weak, and the markets remain fundamentally weaker in terms of, there is higher supplies available from non-OPEC plus, and leaves less room for OPEC plus to actually come in and cater to the incremental demand from the market. And in terms of demand, you talked about China. Yes, that's a very big factor right now for the market. China, mind it, was always more than 50% of the incremental demand growth for oil, and this year they have been particularly weak.
Right. Also on Thursday, we heard about the news that Israeli intelligence suggested that Iran was preparing to attack Israel from Iraq within days, citing two unidentified Israeli sources, of course. But if that were to happen, are we in for another up move on the crude prices very soon?
See, the whole sort of Middle Eastern geopolitical story has been playing out for a few months now for oil markets. Very interestingly, no physical oil infrastructure has been attacked by either sides, and and the impact remains quite sentimental in nature. In fact, you would sort of dial back to last week where Israel had their own sort of set of strikes within Iran, and it missed almost all oil fields and all oil infrastructure within Iran, and the escalation sort of de-escalated, if you may, in terms of the oil markets, just in terms of the oil markets, and we saw oil prices actually going back then after just immediately after those strikes. So the story will continue to play out. It's a sort of question of the temper between the two sides, and how it impacts the oil markets, fundamentally. But of course, there is going to be sentimental impact for that.
Right. Also, when can we expect the crude to stabilize, and what are the levels that you're penciling in? Now, OPEC Plus is set to gradually unwind the 2.2 million barrels per day cut over the coming months, while another 3.66 million barrels per day of production cuts is likely to stay until the end of 2025. What are the levels that you're penciling in on crude, at least till the end of this year?
Till the end of this year, our analytics team is actually forecasting uh, you know quite a stable-ish level, levels around between 70 and 75. Basically, where it is right now, right? I mean, that's the very tight range where crude has been in the past few months as well. But even beyond that, beyond this year into next year, there is certainly going to be more weakness in the market, given OPEC Plus has to at some point of time bring back the production cut, the production that it has been cutting for a long time.
All right, Mr. Agarwal, thank you so much for taking the time out and weighing in on the crude and the prices going ahead. Thank you so much for joining us.
If you like this video, then like, share and subscribe to ET Now.